Hello, and welcome to myfinanceteacher.org. Today we'll have a look at gold, general stock market, Bitcoin, and coffee. So looking at gold, the ongoing short-term daily cycle so far is 21 days old. Usually these cycles last for about 1.5 to 2 months, so there is still some chance for gold to move upwards, possibly for another 1 or 2 weeks, before cooling off a little bit into the end of this short-term daily cycle. But to be honest, this short-term daily cycle is not the most interesting thing about gold. What's most interesting about gold is the intermediate cycle. The question is still whether the intermediate cycle did finish over here at the end of September, or are we still in an ongoing intermediate cycle? To be honest, I'm not exactly sure on the answer to this question, but I still think that there is a pretty good chance of lower lows on gold price. I would say there is about 55% chance that gold is going to drop below these recent lows, basically dropping below 1850 over the next few weeks, versus say around 45% chance that gold is going to break above this 50-day moving average, confirming a new intermediate cycle, and just shoot off into the rallying stage of that new intermediate cycle. Now, what are the factors that support the scenario where the intermediate cycle finished at the end of September? One factor is the length of that intermediate cycle. If the cycle did finish at the end of September, that would give us a cycle lasting for 188 days, and that's very close to an average duration. But of course, it's just an average duration. Sometimes cycles are short, sometimes they last for longer. If the intermediate cycle is still ongoing, it's now 209 days old, and if it finishes in another 3 to 4 weeks, that would make it kind of a long cycle, but not impossible. A factor that points to a possible continuation of an ongoing intermediate cycle, which means we're likely to see lower lows on gold price, is that gold so far hasn't been able to break above this 50-day moving average. If gold breaks above the 50-day moving average, that might actually convince me to increase my allocation substantially, expecting a rallying stage of the new intermediate cycle. As you know from the fictitious portfolio and my regular posts, I already have some relatively small allocation to GLD. And I will convert that allocation to miners to get some more leverage to gold price action once I'm more sure that the intermediate rally is starting. Another factor that supports lower gold price is this 25-week return, the red line on this chart. As you see, historically, this goes back around 8 years or so. Generally, it is a good idea to buy gold when this 25-week return is anywhere between 0% to minus 10%. Of course, sometimes you have to wait for longer for nicer buying opportunities, as over here in 2013, the intermediate cycle only finished when this 25-week return dropped below 25%. But mostly, as you see, a nice buying opportunity is when this 25-week return is between 0% to negative 10%. Yes, of course, sometimes an intermediate cycle finishes with this 25-week return somewhere around 5%, as it did in 2019, for example. But the most recent low is only around 10%. Let's look at the shorter-term view. Is the same, but zoomed in. The red line is the 25-week return. So far, this 25-week return has only dropped to just below 10%, which means that although it's not impossible that the intermediate cycle in gold did actually finish a couple of weeks ago, but it tells me that it's still pretty likely that we will see either lower lows on gold or some sideways move, which would also actually bring this 25-week return down as well. Next, let's have a look at the general stock market. The main interesting question here as well, if the intermediate cycle did actually finish over here at the end of September. With the general stock market though, because this rally since the end of September has been pretty strong, I think there is a greater chance that the general stock market has actually started a new intermediate cycle. That gives us a previous cycle lasting for 185 days, pretty close to an average duration of around just over half a year. In my yesterday's post, I said that short term on the 4-hour chart, we've seen some overbought levels, and I expected a decline down to this uptrend line somewhere around 34.60. Although today it's already below 34.60, below this trend line, so the next support zone on the downside would be somewhere around 34.20, based on mid and late September highs as well as early October high. If the intermediate cycle in the general stock market did actually finish at the end of September, which I think is pretty likely, I would give it, let's say, 60% chance with a 40% chance of lower lows. So if the intermediate cycle did finish, and if we're in the new intermediate cycle, then we should still see relatively stronger S&P 500, as the ongoing cycle is only 21 days old. This shows 20 as the markets haven't opened yet. Of course, elections might introduce some volatility into this short-term daily cycle, but as I said, there is probably not more than 40% chance of dropping below 3,200 over the next several weeks. To talk about the 25-week return on the general stock market, and it doesn't actually look so good. As you see from history over the last 8 or so years, generally it's been a good idea to buy this S&P 500 when the 25-week return is somewhere around or below 5%. And at the recent lows, the 25-week return only dropped down to 16 or 17%. Let's zoom in a little bit, and you see that at the end of September, this 25-week return, the red line, only came down to 16.5%, whereas usually a good buying opportunity is just below 5%. So this decline has been quite mild. That's why it's, I'd say, still questionable whether a new intermediate cycle in the S&P 500 has started. But the bounce has been strong, so possibly with money printing this year and maybe soon with more fiscal support, the markets might actually only give us this mild decline into the intermediate cycle low. Talking about the allocations on the general stock market, I do have a relatively small allocation right now because of a bit of uncertainty with the intermediate cycle low and the ongoing decline. Once I see a bounce in S&P 500, that's when I will likely want to increase my allocation to the general stock market. Next, moving on to Bitcoin. The Bitcoin cycle is now 37 days old. Usually they last for about 2 months. The average duration over the last several years has been 64 days, so around 2 months, which still gives us maybe 1 or 2 weeks of upward momentum before a cool-off period into the end of this ongoing 2-month cycle in Bitcoin. We see RSI hasn't touched overbought area yet, never mind breaking into that overbought area. So after a little bit of a cool off over the last few days, having poked through the upper range of the Bollinger Bands, I think Bitcoin is likely to continue higher, at least into this resistance zone close to $12,000. As you can see from the fictitious portfolio at myfinancesteacher.org, I'm still holding a nice allocation to Bitcoin and Ethereum. And next, coffee. I think a nice buying opportunity is coming up on coffee relatively soon. Yesterday I mentioned that one can kind of discern this triangle. It's not really a symmetrical triangle, but it's not an ascending triangle either. I would say it's closer to a symmetrical one rather than an ascending triangle. So symmetrical triangles usually are a continuation pattern, and after a large drop, a continuation would be another bit of a drop. The height of the triangle is somewhere around $9, so breaking below that triangle at about $109 would give you a target of this nice round number, which also might actually prove to be a nice support zone of $100 on coffee. If that happens over the next 1 or 2 weeks, it will be close to an average duration of this cycle, and I think that would be a nice buying opportunity. Usual duration of these cycles for coffee over the last few years is about 145 days. So over the next few days though, I think there is a chance that coffee retests this uptrend line before continuing down. That will actually give us some relatively low volatility area and allow the Bollinger Bands to squeeze a little bit before another push lower, possibly down to $100. So I personally am getting ready to get myself some coffee. So that is all I want to talk about for today. Let me know what you think in the comments, and if you tell your friends about myfinancesteacher.org, I would really appreciate that. I do try my best to provide as much value as I can to the members. And on that, actually, if you have some further suggestions of how I can improve the service, please know that those suggestions are welcome. Have a nice day and good luck in your trades.